Good morning, viewers. So today I wanted to talk about the 3 stocks I've been buying in the fintech sector, which might interest you and you might want to put on your stock radar. So without further delay, the first stock is DLocal. So DLocal is a fintech platform player who helps brands like Amazon, Spotify operate and get paid in emerging markets such as Uganda, in the rest of Africa, in Latin America. Why they're a great company is that they're still quite small and they're still in the beginning phase of their business, but nevertheless they are profitable already. And what makes me really believe in them is that their CEO is the previous CFO of Mercado Libre, which is the tech giant and fintech giant in Latin America, which is pretty much the equivalent of Amazon, if you've never heard of it, just in Latin America. They're a massive company, and as I said, their CFO is now the CEO of DLocal. Their free cash flow and revenue keeps rising exponentially, and they are set to dominate and take more and more of the market share because of the effective way that they have been running their business. So this one is the most risky play out of the 3. It's definitely the smallest company out of the 3. However, it does have the biggest potential upside out of all of them, which in my opinion is worth buying, because especially at a young age, you do not want all of your stocks to be very defensive or super stable companies. You do want some more risk sometimes, just to be able to double, triple your money, just to be able to fuel your future investments. You know, when you're young, you can take more risk, I believe, unlike someone who's in their 60s or 70s and might be retiring, let's say, in 10 to 20 years. So I do believe that a portion of your portfolio, or at least my portfolio, is going to be in more risky stocks like DLocal and others, which I will talk about. So, what is the second stock I bought? The second stock is also a financial stock / bank who is based in Canada. So this stock is GOEASY. And what GOEASY do is they offer lending and financial services to non-prime lenders. What this means is people who wouldn't traditionally be able to get a bank loan, or a bank loan big enough that they want, based on various reasons. However, this would at first glance be or seem quite risky, but GOEASY has had a great track record of doing this responsibly and being able to remain profitable with all of their, with most of their lending, which can be seen by the growing cash flows and increasing revenue. So they have been killing it, and they've been also paying a dividend for many years now, which does build up trust in the whole company. Their balance sheet is very impressive. Go check it yourself. It's very nice. It's definitely nice, some nice exposure outside of the US, because even though the US is the biggest market and is the best to invest into, in my opinion, you do want some diversification, and if you can get it with such an excellent company as GOEASY, then you may as well take it, in my opinion. And the last stock I wanted to talk about is S&P Global. So S&P Global is a way bigger player than the other 2. It's pretty much got a monopoly when it comes to what they do. So they do data analytics, and they also create ETFs. So you might have heard of a little ETF called the S&P 500. So it's basically created by them and managed by them. Their only competition really is probably Moody's and a couple of smaller players. It's a very hard and high capital intensive business to get into, so the competition is very low, and currently it's pretty much a duopoly between them and Moody's. So not only do they manage the S&P 500 ETF, but they also do credit ratings and lending ratings for the biggest companies in the world and the biggest banks in the world. So this puts them at a unique position to basically be a monopoly, sort of like, let's say, Visa and MasterCard when it comes to payments. And whenever I can get a monopolistic company at a discount, which it is at the moment, I bought it yesterday at a slight dip, and on the technical chart, it was also, you could also see a trend upwards and a clear dip. And I bought straight into the dip. I will probably keep dollar cost averaging into S&P Global, just because, as I said, it is great to have a portion of your portfolio consist of more risky stocks like DLocal, for example. However, it is also very nice to have a solid foundation of very stable monopolistic companies, just to make sure that if and when the market inevitably falls, you do have a nice base of operations of your cash flow. They also do pay a good dividend. I think it's about 0.7% or something like that, and they have been growing it over the years, which also is a nice little bonus. It's not very important to me. Dividends aren't especially important to me because I do see myself more as a growth investor, especially at this stage of my life. However, it is a nice little bonus, and it is kind of fun when, you know, you get like just £5 here and there, able to reinvest into whatever stocks you like. So yeah, these are my 3 companies that I've been buying in the month of June. Please let me know, guys, in the comments what you think about these companies. If any of them have sparked your interest, and if you have bought any of them, what do you think? What's good and bad about them? Anyway, please check out my clothing brand, poetarchives.com. There will be a link in the description, as well as a website text in this video. So please go check that out. I make great original clothing. Is great quality, and I'll send it out as soon as possible. So thank you very much for supporting. Please give this video a like. Please give me a subscribe. This is a very small channel. I'm doing my best to grow it every day. So if you guys are interested in more videos like this, please let me know in the comments, and have a great and wonderful day.